Is the housing market going to crash? What the experts are saying from Bankrate.com. Okay, so their takeaways to reference here, guys, are mortgage rates are high, but home prices keep rising, and you can blame the lack of housing supply. Economists are predicting that any market correction will be modest and not on the scale of the Great Recession. Agree with that. And experts don't expect a housing market crash, but due to low inventory, strict lending standards, and other factors, it's likely to just kind of hold its place. You guys agree with this? Yes.
No, it's so true. It's a lot different than the mortgage meltdown back in 2008, right? When you had a heartbeat and a credit score and you get a home. It didn't matter. That's what it was, right? Nowadays, it's very different. We really have to consider the factors of your income, who's applying, your credit scores. It is a lot stricter.
Yeah, and that was one of the things that the article mentioned, piggybacking off what you said, was that wages haven't risen enough to combat home prices. So that's honestly, I think, the biggest issue of all compared to houses not being available for people to buy. Well, you can have houses, but they might not be able to afford them either way.
Yeah, exactly. The affordability isn't mathing out. I know we've talked about this a lot, but in this article, at least Bankrate's even citing Lawrence Yun from NAR, the chief economist from NAR, the National Association of Realtors. Prices will remain firm and will not decline on a national level. And, he cited here, anytime home prices outpace people's incomes, that's not good. The result is a squeeze on first-time home buyers, but repeat buyers can rely on gains from the housing market and their stock portfolio to finance purchases. Here's my note. Must be present to win. You guys remember that term? Like when you're doing like a raffle or something, like must be present to win.
Yeah, exactly.
Same, in my opinion, same thing applies here. Like must be in the market to win. If you are out of the market, you're currently not winning in the market, and you got to be in it in order to gain the way he's talking about here.
No, absolutely. I think that people are becoming more aware of this. It's becoming more of a standard. And people are just like, hey, I already know rates are going up, but I also know that they're going to go down. So I'd rather go into a home now because there's going to be less competition than when the rates go down. There's going to be even less of homes available. There's going to be more people I have to challenge with. So I think people, they're just getting a lot smarter.
Yeah.
And I think it's because we continue to give this information out. So
I think it's, I had this funny analogy I was thinking about the other day, and I was like, it's like housing hokey pokey. You put your right foot in, you put your right foot out, put your right foot in. Like people are like, I'm in. I don't want to be in. I want to go. I don't want to go.
Yeah.
Maybe I should. No, maybe I shouldn't. Maybe I should wait. Maybe I should go now. And, a lot of that is now just, what I'm trying to say, like the landscape has changed for everybody, right?
Exactly.
So if you're in the housing market, you have all-time high equity, and you probably are locked in at a really low rate. That's fantastic. You want to move, if you don't have to move, you don't got to.
Yeah.
If you want to move, then fine. You're going to make a lot more money than you would have 2 years ago on the sale. But maybe the rate may be a little bit higher for you right now. Okay, conversation about that. Yeah. But again, inventory is tight too. So you're going to be buying it, like, let's say the new market high as well as you're selling at the new market high.
So I had a client tell me the other day while we're looking at a house, she's like, yeah, well, they were telling me that if I wait for 2025, I'm going to be able to buy 2 for 1. and then I was like, wait. Let's just break that logic down, right?
Yeah.
So in order for that to happen, millions and millions of houses need to pop up overnight.
Exactly.
Yeah.
If that does happen, then there's bigger problems. The economy probably went to shit.
Yeah.
And we have other things to worry about. If that happens, God, we're going to be in a world of hurt. I hope it doesn't happen. But like they said right here, you're not going to see houses price decline. There's just not enough inventory. Yeah. There's just no way. And compared to other years where there was plenty of inventory, like in 2007, 2008, now there's no inventory. So it's like we're staying steady Eddie.
Yeah, 2022 did that to us, right?
Yeah.
It's one of the lowest inventory housing inventory we had.
Yes.
And it was just crazy. We're finally starting to have a little more supply.
Yeah.
And so one of the things that they did say here is it's economics 101.
Yep.
Simple economics, supply and demand. It's just that simple. And we need a lot more. There's more buyers right now than there is sellers.
Yeah.
Yeah. So the question everyone keeps asking is the market going to crash? And the simple answer is no, it's not. Now, on the real estate and mortgage side, has volume collapsed? Yes, absolutely. So that it's true for everything that's associated with real estate. Loan volumes are down.
Yeah.
The number of homes that are exchanging hands is down. Even though inventory is up, number of resold homes is kind of coming back a little bit. Yeah. We got new builders building more homes now. So there are some things that are, let's say, thawing out. But in general, the overall national collapse of home prices isn't happening. And it's more localized to, let's say, the industries connected to housing. Because you can have less escrows, less title, less appraisals, less of this, that, and the other thing that are all connected. And that imbalance is just going to be the way it is. And we're not in a place where all of a sudden affordability is going to come back because, again, that's contingent on inventory.
Yeah.
showing
And
up.
once again, this week we reached 32% more homes available than the same time last year.
Right.
This time of year.
So I mean, that's showing that people are coming out of the woodworks. They want to sell, they want to move, they want to transact, and they're seeing that there's nothing budging.
Yeah.
It's like you wait last year. The more that you wait, dude, things only got more expensive.
Yeah, no, exactly.
And the ones that are actually, foot in and want to stay in, they're gonna have to make those sacrifices. And when I mean sacrifice, not like an arm and a leg, but you're gonna have to say, hey, maybe I don't get that extra square footage right now, but I do have a fixed payment that I know my rent isn't gonna spike up in the next coming years. I could weather it out and then wait.
Yeah.
Yeah.
And earlier we mentioned millennials. Millennials, what's usually their first time home?
Like a condo?
Like a condo,
Yeah.
exactly. I just had a call this morning with a millennial, and he's like, I need a 3-bedroom. Because my family's growing. I have my 2 daughters and I like to get an office, and my wife doesn't have the office etiquette. We're sharing the same office and we work from home majority. So I need a 4-bedroom now, right? One office for me, one office for them. The girls could still share their room, right? So he asked me for my advice, and I'm like, hey, you know what? I'm not a big fan as an investor holding on to condos. Why? Because of the HOA situation. So in this case, he's like, you know what? Yeah, I'll put it to sell, but how does that work? And I just told him there's a simple clause right there that you can put, contingent upon seller finding suitable home. And I think we're going to start seeing more of that.
Yeah, that's a great example. And I think that, even that is kind of another part of what they were referring to here is it's kind of like there's localized results because of localized reasons, right? It could be hyper localized to your actual family or work situation, or just the city that you live in, because even the economists cited here, they're saying like, look, if there is a correction, it's going to be mild, if at all, okay, and that's a lot to do with inventory and demand. Even at elevated prices and elevated mortgage rates, people are clearly trying to get in because psychologically they're like, oh, well, I'm either in the market or I'm not. And so if you're frustrated by being on the outside looking in, people are like, well, I'm frustrated. Well, if it costs me to get in, I'm just going to do it. So people are doing that. But to answer the question about if it's going to crash or not, it really is localized. You're going to see some places where there's going to be softening. But here's what I'm going to remind everybody. You're going to be talking about a softening of, let's say, 5 to 10% on a city that had a 40% increase over the last 24 months.
So you're still running positive.
So you're still really hot. You're like, oh my gosh, let me use, I'll say Austin, Texas as an example.
Yeah.
Austin has a 10% price decline over the last 6 months. Like, okay, well, it was like 40, 50 or something crazy like that for 24 or 36 months. You're fine. You're fine. So just remember that's always in the context of it. And I know we also have to kind of talk to people who are maybe frustrated as well. They have not been able to get in. They've been waiting on the sidelines, and now waiting on the sidelines hurts you more because if you're waiting for rates to drop, guess what? Prices are going to stay or go higher, and there's going to be more people fled to be more competition.
Yeah.
And you might see more inventory, but that's going to have an equivalent number of people who have the demand for it.
Yeah. I mean, the crazy part about it, we've been pivoting the last year, working with more investors. And when we're telling them, oh, yeah, you're going to do this fix and flip, it's going to be 11%, 12%. There's no hesitation. Just give me the money because they understand that the future of that matters most. I'll be able to kind of flip that, make X amount of money, and it allows me to just go into my next venture, So it's just pretty crazy to see these things.
And that's a perfect way to, help your clients, condition them to start looking at things through like the investor's lenses, because right now I feel like on the contrary, residential is all emotion. Like, this house, what am I going to do with this space? The rooms are too small. The closet, where am I going to put my freaking shoes? My Birkin bag? But you you start to realize that at the same time, all that doesn't matter, because if your house is your shelter, I mean, you could do whatever you want to it. It's about right now. What can you afford right now? And if that payment is good, I feel a lot of people are like, they're thinking about the future, but right now it's not a time to think about the future. It's like, what can I afford right now? And then that's going to help you propel to your future.
That's why I'm excited that you brought the next article. It's pretty cool with the millennials. Because it's just so different the way they're thinking. Far from when I got into my first home, et cetera. It's just way different. The mindset, how they're looking at things, just like, this is not my forever home.
Yeah, there's a major shift in the psychological approach to homeownership right now. And type of home is kind of like a whole subset of that. But like the idea of homeownership is completely shifting. We've talked a lot about renting versus owning. There have been actually a lot of comments on our videos recently about, people who are renting and then taking the difference and they're investing it or they're saving it. And we have a lot of people that are like, no, I bought a house because I needed to buy a house because of my conditions and circumstances, whatever. And I get that too. The one thing before we jump ahead, I want to make sure that we review and revisit this. From March of 2020, 2020 to March of 2024 is the median home price went from 280,000 to up to 413 at one point.
Yeah.
Back down around 400, kind of came below to like 380, and it's like right 393. I mean, this number kind of changes based on your data source. But here's the deal: 4 years ago, it was 280.
Yeah,
that's the point. It was 280 4 years ago. Let's just call it 400 for now for easy math. That is a substantial increase. And to address people who are having a problem accepting our terminology that there's going to be risk if you do, risk if you don't. Yeah. This is the example I keep talking about.
Yeah, but there always is.
That's what I'm saying. There's always risk. Number one, there's a risk for sitting on the sidelines. Well, guess what? If you bought at 280 and you're sitting at 400 now, you just lost out on that. What if you're buying at 400 now? Well, what if it goes back to 280 again? The conditions for which that were to happen would have to have 5 variables change economically at the macro level for that to occur.
And at that point, good luck if your house is still up. You might not even we have bigger problems at that point. Well, that's the least of your problem. Your house dropped. God,
pointing that out, this is what's crazy. I went to go preview, 5 sites where those investors are. One of the guys is he wants to build 5,000 homes in 10 years. That's his goal, and that's the actual name of his LLC. 5,000 homes. Right? That's his thing because he just wants to do that. We went to this property and 6 years ago, this gentleman one of these investors bought this piece of land right in front by the airport, and he got it for $595, and it was just a dump. It was a breakdown. People are like, "You're so dumb, bro. Why would you get that property?" Well, I showed you the video this morning, right? He ended up splitting the actual lots into 3 and build them 2,300 square feet right in front of the airport. And
3 units
on one piece of land.
And they're each 2,300 feet.
Exactly. And they're all 3-story.
Oh my God.
I mean, they're beautiful. If we could show them later, we can show them later. But so Andy, check this out, though. He bought it for $595 6 years ago. Yep. Obviously, it takes money to get the permits and do all that stuff that you have to do, right?
Let me get my beans.
On one of them, the middle unit, you got middle. The last one that's closer to the airport has a better view and unobstructed. Sold for 2.6. The middle one sold for 2.2. The third one, that's highest of all of them, because it's kind of like in this tier, he actually has no obstructed view either, right? 2.4.
All right, so we might get ate up in the comments, but how much did it cost for that to get built?
So per hard cost was $1,025,000. And what they mean by that hard cost is what built the structure, because then you have the other soft cost that's going to be for the walkway. And here's the other thing in San Diego.
The garnishing.
Yeah, you have to actually pay for the pavement because you made holes to get electricity, plumbing and all that. Yeah, they have to do the whole street.
Oh, wow.
So they have to do the whole street, that sidewalk. So sometimes we're walking the city.
Oh, so that sidewalk.
The city did the sidewalk. That's the investors, whenever their investors are doing it.
And it goes from where their first property to the end of the property, and that's the only nice sidewalk there is.
No.
Oh, they do the whole thing?
The whole thing. Everything has to match. Oh, those are the rules. Those are the when you're looking at those things. But even then, going to Andy's point, there's risk. There was risk. At that point in time, that house was too much for what it should have been purchased for.
Right.
But when you have that vision of what you're able and capable of doing, then that just makes the world of a difference.
Yeah, that vision executed and put into action right now is just a quick math: $7.2 million of value or sale value. And you said $1,025,000. Did you mean $1 million and a quarter?
$1 million, yes.
$1.25
million. $1,025,000.
Oh, so 1,025.
Exactly.
Oh, geez, that's even crazier.
Exactly.
Okay, so his build cost was less than $1.75 million of build cost, not including the soft cost or whatever. But that's a crazy value add.
But that's 6 years, right? And people think you're making it because it's right away. No, but this was a 6-year headache.
Tell me, what investment gives you that return in 6 years?
Exactly.
Without you know what I mean?
Yeah,
that's a great story. I'm glad you told that because again, we talk about risk a lot, and there's risk for doing things and risk for not doing things. Not every situation is going to turn out that way, but again, you're talking about someone who took the risk. Number one, 6 years ago to buy for $595. You said
yes.
Okay, and then for 6 years it's been a work in progress.
Absolutely.
So there's been I'm going to say zero return because there's been zero return for 6 years.
It's been expenses just being paid out,
bleeding out cash or borrowing money or whatever it is. You're debt servicing that along the way. So obviously our costs are probably running more than $2 million total here.
Yeah.
But even after that, let's say you're still clearing $4 or $5 million after all costs and expenses. That's a tremendous value. And you have to do these kinds of things, but that's someone who is either was already walking into it confident or hoping to build confidence along the way, but seeing what they wanted to see long term and was patient. I think patience is missing from the market a lot right now.
Yeah.
It's like risk aversion, number one, lack of patience, number two, and I want an immediate return, which kind of go hand in hand. But it's tough. Not that.
No, this is not. Real estate is not right. It's not a quick return. It takes time.
Just like for sure return.
In some places, but this is in some places, right? We also hear horror stories in some other cities, in other states where, builders can't sell the homes.
Yeah.
They're on the market, but it just, again, because we're in San Diego, we're landlocked. It's a different story.
Yeah.
That makes sense.
Yeah, that's an amazing story. I just think that what's funny about that is it weaves into what this article was talking about anyways, because there are things that they're for reasons they're not going to be a housing crash, and this is one of them. Like, yes, you can take one lot and turn it into 3, but that still doesn't. You'd have to do that so many hundreds of times to absorb demand. To absorb the demand that it's not happening. Part of what they talk about in the article is that builders aren't building quick enough. We're mentioning that some builders have built maybe too many homes in other places, not here. We need more here in San Diego. Our lending standards are still going to be tight. Inventories are still low.
Yeah.
And, it's just elevated higher prices for longer. Even the prices you're citing right now, 2.2 million, 2.4,
exactly.
and 2.6 or something like that. Man, that's a pretty penny.
Yeah, I mean, one of the investors, the one that bought it for 2.6, is going to be his temporary home, and he's more looking towards Airbnb in it. So people are finding other ways how they can keep these properties and make a profit of it. I do like to touch a point here with the homes held steady, even as mortgage rates soared to the 8% back in October of 2023, and we saw that our business came to a freaking halt. You guys remember that? It was like crickets.
Yeah.
Like, what happened? Who changed everything? Right? Reaching the highest level in more than 23 years.
Yeah.
That's history made, and it's crazy. Yep. And then it says here, they have since dipped, falling briefly below 7% before averaging 7.33% in Bankrate's weekly survey release April 17th. We saw that big climb in interest rates within a week, 2 weeks, back to, it kind of felt like October.
Yeah.
The only difference, and I'm sure you would agree, Brian, it's like, it didn't come to a complete stop. We did much more loan applications, and we got more open escrows than we did back at that time. In like 2-3 months, right? That it took us, we did it right. Still, everything changed, but yet people still like, nope, get me in my property. I need to get in there. It's crazy. It's different.
That cultural shift I keep talking about. I think it's because people are like, oh, well, you know what? I didn't buy when it was high before. They're going back to that rate. I better do it now. I better do it now.
What I'm seeing also is that even the headlines and the articles and the information that's being put out is getting people to condition, like, forget about the rates. Like, that's not the problem. Inventory. So now people are like, F the rate. We need houses. Where's the houses at? Like, let's go. And that prompts people to start saying, like, hey, shoot, I might not have a house next year. I might not be able to get a house next year. Who cares if rates are damn low?
Yeah.
There's going to be even less houses.
Yeah.